Nashville sellers are spooked big time. Now, this was a complete trajectory change. If you remember last week, this was one of the most bullish charts I showed. It completely did a 180 this week, and we're going to dive in because I wanted to understand why it changed so rapidly. I was actually really surprised. It surprised me so much that I changed my neighborhood tracker, which I'm going to show you here shortly. We're also going to look at the rate of bank foreclosures. I had a question about that, and Charlotte Park. One of y'all asked for Charlotte Park, so I'm going to cover that in this video. If you find these videos helpful, please click that like and subscribe button. If you want to stay on top of the changes, you're going to have to click that notify button. Before we get to the price cuts as a percentage of active listings, let's just take a step back and look at active listings. Active listings are up 13.5%. Now, the key here is the year-over-year growth is higher than it was last week. This is expanding. If this happens again for another week, I'm going to change this trend to be more of a buyer trend. It's still not quite above where it was in January. That to me would be a buyer trend signal. That's a counter trend to what we saw in 23 and 24. We're going to keep an eye on it. Will it trend up? Of course, contract volume is going to be a big part of that. Now, contract volume is down 8.6%. I spent a lot of time looking at how this is changing, and I do believe we're going to catch up in the next week or two. We're going to be year-over-year negative, probably less than 5% by next week. We'll see if I'm right. And then it will continue closing the gap until we get up. Now, from a buyer standpoint, anecdotally, I've been talking to a lot of buyers that want to buy. They're being very slow and cautious. They're paying attention. And I think that's also showing up in this number. Now, before we get to the price cuts as a percentage of active listings, I do want to go to comments because I had 3 comments and I just want to respond to your comments. I appreciate them. I'm going to answer these questions. What is the rate of bank foreclosures? Now, here's the thing about foreclosures. Okay, this is Adam data. This is as of January 2026. If we go into Tennessee, what we see is that Tennessee has 1 in 5,355 are going to foreclosure. These are foreclosure filings. It doesn't even mean there's a foreclosure auction. It's down 13% from November, but it's up 50% year over year. I think it's not unreasonable to think that foreclosures will be up 50% year over year. That number is growing. It will take years for it to grow in a way that really impacts markets, at least in the trend that it is now, even with these 50% growth numbers. Now, let me put this in perspective. 82% of homes right now, 82% of homes are under, these are single family homes, are under 5% mortgage rate, 82%. Almost 37 million don't even have a mortgage. And because of that, people talk about the FHA delinquencies. I did a video on FHA delinquencies. FHA delinquencies are high risk. FHA loans are high risk. We'll see foreclosure volume spike big time in FHAs if the government allows it. They're continuing to shift to forbearance instead of loan, loss mitigation. They're doing all kinds of games. There's still no escalation here. But even if there was, it's such a tiny percentage of single family homes, it's going to impact FHA neighborhoods. Now, I did a video on this. FHA neighborhoods are new build neighborhoods. Think 500 and below new build neighborhoods. Those neighborhoods are ripe for FHA loans. If a lot of people are getting FHA loans there, high risk for distressed selling. Okay, let's go back to the comments. G. Taylor says that 2 of my neighbors gave up trying to sell on the market for almost a year. I talked to one of them and he said he was getting about 2 showings a month and no offers. Right now, you can rent for cheaper. There is an apartment complex just down the road that is offering the first 6 months half off rent. That's basically 3 months free. I have to admit, if I was out there looking, I would just jump on that instead of buying. Renting makes a lot of sense for most people right now, especially in the condo space. For the vast majority of you, from a financial perspective, it's so much cheaper to rent. These HOAs, you've got HOAs and all kinds of deferred maintenance that gets paid by the owner that's renting it out. It's very attractive to rent, especially in the condo space. Now, here we've got Ethan, can you do Charlotte Park next? Thank you for your insightful videos. We're going to come back to Charlotte Park. Let's talk about the price cuts as a percentage of active listings. Now, it's really important when you hear me talk about price cuts as a percentage of active listings, what I'm measuring. Here's one, 5402A Kentucky Avenue. Now, if we look at this listing, you can see that they cut their price on February 10th. So that would count as a price cut, but it's real important that you realize here's one. This is 603 51st Avenue. They've actually been trying to sell since May of 2025, so almost a year. And you can see they started at 950. They're now down to 900. But if you look at this, you'll see they have not cut their price with this new MLS ID. Therefore, this would not count as a price cut in that ratio. In other words, there's going to be more active listings that have been relisted at lower prices that aren't counted in this. It makes this number, even if it was the same, it would really be considered bearish if the active listings are growing, and they are. We have a lot more price cuts out there than even this number is measuring. When I dug into this, what I found, the new builds were the ones cutting their price. What you can see is these dotted lines are existing homes. The new builds, prices are dropping dramatically. We're seeing it in the new build space. And crazy enough, they are losing market share. Look at this. Contract volume of new builds are much lower than they were last year, the year before, the year before. They've been losing market share for now 4 years. I wonder why. New builds for a fourth year coming in lower than where it was in the previous year, that they're losing market share, even though they're cutting their price more. I would say right now, and this is why I changed my neighborhood map to monitor how many new builds are in the neighborhood. Okay, so let's look at Charlotte Park and I'll show you what I mean. Okay, Charlotte Park. Someone said, let's look at Charlotte Park. Okay, Charlotte Park, 73 active listings, 53 the year before. Okay, 73 active listings, 53 the year before, 13 under contract last year. Now there's 15. Okay, so there's more under contract, two more than last year. And look at this new build ratio, 45% of the listings are new construction. The new is 33. The existing is 40. So new construction is a huge contributor to the supply in Charlotte Park. What does that mean? That means you have 33 unoccupied homes with motivated builders. Let's take a look at the price cuts in this neighborhood to see if it's going to impact. Now, what we can see, I'm going to zoom in just on January here. And what you can see here is last January, February, we were at about, let me take off the contract volume. Contract volume is about the same, but we were at 22 price cuts and we had 52 active listings. Now we have 73. So that's 50% more active listings in this neighborhood. And we have 25 price cuts. So only 3 more price cuts. It's one that I think is probably softer than what I would have said 4 weeks ago. Charlotte Park is probably going to be softer than what I said 4 weeks ago. We'll keep an eye on it though. It's real important for you to assess those new builds. If you're a seller there, look at the new builds. Are they even comparable? Because if they are, you're going to have competition. If they're not, a lot of these new builds can be very different. They could be townhouses. Townhouses are just completely different from houses. It's a completely different buyer pool. And you got to assess that as well. And you can see, look at the spread between the new builds. There's new builds going for as low as $233. These are detached, site-built homes going for $233 a foot, and as high as $400 a foot for detached. So that's quite a spread there. Quite a spread. When we look at the sales price, same thing. You can see this. To me, this is market confusion. Anytime you see prices going up and prices going down at the same time, there's definitely something weird going on there. Something to pay attention to. Let's do another neighborhood though. I have a buyer looking in the 12 South area, only 5 new builds right now and 52 existing. So only 10% is new construction. Now I will say in 12 South, a lot of the new builds end up on the Compass's private exclusive listing. And I think that may be driving some of this. So there is some shadow inventory there that would be important to pay attention to. Now I did have somebody ask about Hendersonville. Here's what I'll tell you. I looked at the contracts and how they're picking up. Sumner County is a county that's starting to pick up more, and I think it has to do with affordability. So Sumner County may end up being a beneficiary this year of potentially a softer market in the past few years. Here we can see in Durham Farms, much fewer active listings. And look at this, only one new build active listings. This has been a neighborhood full of new builds for years, and it looks to me like the new builds are finally drying up. Look at that. The lows have been dropping in this neighborhood. So that would be a sign. I'm guessing those are townhouses, but that would be a sign to me that prices have been dropping. Even the under contract is setting a new low. That's a townhouse. Townhouses look like they've been dropping pretty substantially. I mean, 193 a foot, now 186 a foot. Now we have one at 181 a foot under contract. So you can see townhouses have been pretty soft in this neighborhood, but this was a new build neighborhood. It's no longer a new build neighborhood. Let's keep going. Here's the new build area, 67% new build in Westfield. Let's look at Mount Juliet, because I've got a buyer looking at Mount Juliet. This area right here, look at this, 72% new builds. You better believe these new builds are going to impact. They're going to impact 66% new builds. Also remember, what they're listed for isn't necessarily what they're going to sell for. Typically, what a new build lists for is low, and then they nickel and dime you up with all kinds of additives. If you are thinking about buying, make sure you're paying attention to what the new builds are doing around you, where they're going up, what construction is happening around you, what the prices are that they're selling for. Use that as a barometer. You can even use that if you want an existing home. There's plenty of reasons why people don't want new builds. Even if you want an existing home, you need to tell them, look across the street. I would rather have your house, but I'm not going to pay a premium for it. And you can get a better than average outcome. And with that, I hope y'all have a great rest of the day. I look forward to seeing you next Saturday. Thanks for watching.